Good day, everyone. Trust you're doing well today. Today, we're talking about how the market traded last week and what may happen, this new week. What if the biggest danger in the Nigerian stock market right now is not the fall we have already seen, right? What if the real danger is what investors do after the fall? Because the NGX has just gone through five, straight losing sessions. The All-Share Index started the week with 248,529 points, right? So, and ended on Friday at 242,619 points. This is a fall of 5,910 points. Market capitalization also fell from, around 160.42 trillion naira to 156.62 trillion naira. So yes, the market has taken a hit. But here is the question that matters. Is this simply investors taking profit after an incredible rally, or are we watching the early stages of a much bigger correction? And the answer is more, interested than simply saying the market is falling. Let's start with what we actually know for now. First, the fact. On Monday, that was August 10th, the NGS surged 1.21% to close at around 248,529 points. Market capitalization crossed 160 trillion naira, reaching about 160.42 trillion naira. At that point, the market year to date had reached about 59.71%. This is huge returns in a very short period. But then something changed. Tuesday brought a decline. Wednesday brought another decline. Thursday brought another decline. And Friday brought another. By Friday, August 14th, the ASI had fallen another 0.16%, closing at 242,619 points. This was the fifth straight losing session. The year-to-date gain was still an impressive 59.91%. So even after the sell-off, the market had not suddenly turned into a losing market. This is the first thing investors need to understand. A market can fall for several days and still be inside a much bigger upward trend. And that is exactly why this situation is difficult to read. Now, let's look at what investors are actually doing. First, you need to realize that if everyone was panicking, we would expect investors to be rushing out of, almost everything. But that is not what, the numbers shows. I realized that on Friday, some stocks were making very strong gains. International Energy Insurance rose 9.92%. Transnationwide Express gained 9.65%, Guinea Insurance rose 6.67%. At the same time, Fortis Global Insurance fell 9.31%, Omatech fell 9.04%, and Dangote Sugar dropped 7.79%. So money is not simply disappearing from equities, it is actually moving around. Some investors are selling one stock and buying another. Actually, you know that as sector rotation, right? So last week data make this even clearer. According to Business Day report, investors traded 12 billion shares worth of about 176 billion across 224,146 deals during the week. Trading volume jumped 126.8% from the previous week. But here's the important part. The banking sector stocks, right, accounted for 11 billion shares. That's about 92% of total equity volume. And three companies, which are Fortis Global Insurance, Cornerstone Insurance, and Consolidated Hallmark Holdings, alone accounted for 9.4 billion shares. That's about 78% of the week total equity volume. So when you hear 12 billion shares were traded, don't immediately think everybody is running for the exit. A huge part of that activity was concentrated in a small group of stocks. But there is a warning here. The selling is no longer isolated to one or two small companies, right? By Thursday, for example, the market had lost about 3.54 trillion, from Monday's peak. The DSI had fallen to around 243,000 points. Market breadth was also weak. On Thursday, 40 stocks declined while about 27 advanced, and large companies were getting hit, right? Unilever fell almost 10%. Access Holding fell 3.28%. Zenith Bank fell 2.24%. Also, Transcorp fell 2.63%. Now, this is more important than watching one small stock fall 10%. Why is that? because large companies have a much bigger effect on the overall market. So if small companies fall while the major banks and large companies remain strong, the market can recover quickly. But if the big companies start falling together, the story changes. And that brings us to the market situation right now. Right now in the market, there are two groups fighting over the next move. On one side, you have investors who bought earlier. They have made a lot of money, right? So their question is simple. Should I protect some of my gains? For instance, imagine you bought shares for 10 million naira. Your portfolio has risen to like 16 million naira. You are now sitting on a 6 million naira cool gain, right? Then the market start falling. At 15 million, you may still feel comfortable. At 14 million, you may start thinking about selling. At 13 million, you may start thinking, I should have sold earlier. This is where human psychology becomes important because people hate losing money, and sometimes they may become worried about losing a profit, right, than they were excited about making it. That's one reason, right? A correction can actually feed itself. One investor sells, another investor sees the fall and becomes nervous. They sell too. Someone else sees that and thinks, well, something must be wrong. They sell too. That is how normal profit taking can become, a much bigger correction. But there is another player in this game, right? That player is the buyer. The buyer is looking at the same falling market and thinking, well, good price. The stock is actually now getting cheaper. That is why falling prices do not automatically mean a crash, because you might actually be catching a falling knife. A healthy bull market usually attracts buyers when prices become more attractive. A weaker market does the opposite. So people see lower prices and say, I don't want to touch this. That's different from when you just, buy because you feel you have seen a dip, not knowing that the dip will keep dipping. So what should we watch now? Forget trying to predict the exact next NGX closing number, right? There are four things I would watch personally. Number one, 240,000 ASI points. Number two, the banks. This may be even more important than the 240,000 points itself, because on Friday, the banking index fell about 0.23%, but the picture was mixed. For instance, Access Holding actually gained 2.08%, Zenith Bank gained 0.49%, GTCO gained 0.39%. Meanwhile, EcoBank fell 5.41%, Fidelity Bank fell 2.27%, and UBA fell 1.09%. Now, that mixed result is actually useful information. The banks are under pressure, right? But they are not all collapsing together. However, if that changes, I'll take the bearish case much seriously. Number three, market breadth. Interestingly, the full data week, right, shows 26 gainers and 59 decliners. Number four, what happens when buyers get a chance? This is probably the biggest test of all. Now, if prices fall and buyers step in, the bull case stays alive. There is hope. However, if prices fall and nobody wants to buy, that's when you need to become more careful. So to that effect, let's play out three possible futures, like what could happen next. Scenario one, the healthy correction. The ASI stays around this current area. Selling slows down, banks stabilize, breadth improves. That's market breadth. Some investors who took profit start buying again. The market spends several weeks moving sideways, like consolidation, right? Then the next earnings and dividend cycle gives investors a reason to buy again. In this scenario, the August sell-off becomes a normal pause after a very strong rally. Scenario two, the deeper correction. This is the middle case, right? Whereby 240,000 points breaks. Fear increases, more investors take profits, the large cap stocks weakens, the market falls another several percent. But eventually prices become attractive enough for bigger investors to step in. The market finds support. This could be painful for investors who bought near the top, but it will not automatically mean the long-term bull trend is finished, right? So that will take us to scenario three, trend reversal. This is the scenario I would worry about most, because if 240,000 points breaks, right, the banks begin falling together, right? Market breadth becomes much worse. The market tries to recover but fails. Then investors stop thinking, should I take some profit or start thinking, how much do I need to get out? That psychological change can turn a correction into something much bigger. So where do I actually stand? Based on the information available as of today, right? I would roughly assign 50% probability to a normal correction followed by stabilization, right? 30% probability to a deeper correction of roughly 5% to 12% from the recent high before the market find a support, and about 15% to a much more serious trend reversal. I'll put a chance of a true panic type crash at roughly 5%. These are my estimates, no fact or guaranteed forecast, and I will change those numbers quickly if the evidence changes as well. And there's one final thing investors should remember. The NGX is still up about 55% for the year, right? So a 2.38% fall from Monday's peak, right, is not by itself extraordinary. The word crash is too strong for what we have seen so far. But the fact that the market is still up more than 55% does not mean investors should become careless. Strong markets can fall much faster than people expect once a sentiment changes. So here is my practical takeaway. Don't panic because the NGS has had five, red sessions, but don't blindly buy every dip either. Watch for a major support level area. All right. Then watch the major banks like the banking index, the banking sector. Watch market breadth as well. And if possible, you can also join my Telegram community where I can, prevent you from buying fake dips. And most importantly, remember that volume by itself does not tell you whether the market is bullish or bearish. You need to know where that volume is coming from. So don't try to guess the ending. Rather, watch the battle as it unfolds, because the next move will probably be decided not by the people who sold on Monday, but by whether someone is willing to buy when they sold. Now, that being said, if you're looking to get regular stocks recommendation and stock market tips for both Nigeria and US stocks, I have a Telegram channel where I share frequent market insights to enable you beat the market. So if you're interested, you can find the Telegram link in the description box of this video below. If you gain value from this video, please like and subscribe so you do not miss my next video. All right. Have a nice day. Bye.